Last week, the Fed came out and said they are keeping interest rates steady. So what does that mean for consumers in the real estate market? Tune in right now. So the Federal Reserve is making news again in December. It's been a pretty busy December for news in the financial markets. And the Fed came out and said last week, and if you don't know, here it is again, that they're keeping rates steady. They're not going to be increasing rates. They're not going to be decreasing rates. So what does all this mean? Because it's not the kind of thing where the Fed makes a decision and it instantly impacts the markets. There's a lot of ripple effects that happen there. So I had three major takeaways from the Fed's decision, and then we'll talk about what that means for the real estate market. So the first one is loans are going to be cheaper. Interest rates are still historically low. That's not going to change. The Fed does not set interest rates, especially mortgage rates. That fluctuates based on the 10-year T-bill. So that's where you want to look and see as the yield increases on that, rates decrease, vice versa. So there's going to be cheaper loans out there. That's my first major takeaway from this. The second is people that are savers and saving a lot of money, they might lose a little bit in this situation because they're earning less interest on their savings. The highest savings account rate that you're seeing right now caps out around 2%, so not very much, and the norm is about 0.1% interest that's being paid for savings accounts. So you're going to see a lot of people go to online banking where they can get better rates. There's a little more leverage there, and those low rates, that causes people that are saving their money to lose buying power. And takeaway number 3 is that adjustable rate mortgages and home equity lines of credit, people who have those sort of loans, they may be the short-term winner here because what happens is with an ARM, that rate is tied to the prime rate. So if that's going to stay steady, stay where it is, adjustable rate mortgages only adjust once per year. They don't adjust every market cycle, every 30 days. So those folks that have ARMs that were set to adjust, they may be in a little better shape here. Now with a home equity line, those adjust typically every 60 days. So what you're going to see happen is if rates go up, people with home equity lines, they may see a bigger bump in their payments. So we got these 3 takeaways. What does it mean for the real estate market? So if you're a seller right now, here's the good news. Buying a home is more affordable than it was even this time last year. Everyone predicted rates would have been in the 5s by now. They're not. Mortgage rates are coming in the mid to high 3s, so on a 30-year fixed loan. So what that means is that buyers can afford more to buy your home. That's a really good thing, especially with inventory levels being low. You can really leverage that to get a better price. And that goes in the first-time buyer segment of the market, in the trade-up segment of the market, and in the luxury and premium segment of the market. What it means for buyers is that your payment is going to be lower. So even as prices continue to increase, usually you buy your home based on the monthly payment. Your down payment and your closing costs, they're pretty fixed depending on what price range you're in. But 20% at $300 versus 20% at $350 is not a whole lot of difference there, not a whole lot of extra money. So because you're buying your home based on the monthly payment, this is good news for us as we head into 2020 because it's going to be a little more affordable to finance a property. And with rates going down, you may be able to afford more. And by being able to afford more, that means you can expand your search a little bit, maybe go a little further in terms of a price point to get a home that you want, and you're not going to have to move out of as soon as you thought. So all things to think about here, and really what it means is you want to sit down and come up with a game plan. So that's what the rate news means from the Fed. You got questions, you want to know more, you know where to reach me. Otherwise, we'll be back next week.